Facebook released their earnings last night. Really interesting results, and I'm going to walk you through my perspectives on what this means with a bias towards the media and publishing industry. So, starting with their revenue, they're now at a $68 billion annual revenue run rate. This is massive. They're growing 30% year over year. Despite their size, this growth rate is truly impressive. Total digital ad spend is growing 15% year over year, so they're going twice that rate. And at their total revenue size now, about 10% of every advertising dollar spent is going to Facebook. And that's across all channels. That's TV, that's print, that's online, that's search. 10% of all advertising spend is now going to Facebook, and they continue to grow 30% year over year. Looking at their advertisers, they now have 7 million advertisers. The last time they reported this number publicly, in 2018, it was 6 million advertisers. What's more impressive, though, is there's 90 million businesses that use Facebook services or products, mostly for free. So the upside and the potential for them to keep growing here is massive. Digiday did a survey of marketers in December, and they found that 50% of marketers plan to increase spend on Facebook in 2019, despite all the perception challenges they've been having. And then 73% of marketers plan to increase spending on Instagram. So their momentum is going to continue. Looking at their user growth, they now have 2.7 billion monthly users, and 2 billion people in the world use a Facebook service every single day. What's probably most impressive is they're still growing their user base, 9% year over year. Other social platforms, Twitter, Snapchat, and whatnot, are in decline. So clearly there's this consolidation, this bias towards their services. Now, reading between the lines, and this is coming from their earnings transcript, some really interesting insights. So the term commerce was mentioned 11 times, and this is increasingly going to be an area of new revenue for them. They still count it as part of advertising revenue. Watch, which is their video tab, and video as a term was mentioned 27 times over their earnings call last night. The terms privacy, security, and safety combined were mentioned 47 times, so clear acknowledgement of these challenges and issues they're having. And what's most telling is they use the term stories 83 times, which is more than every other term I just talked about combined. This is very clearly their focus for growth. Let's get into stories. So 2 million advertisers now use stories as a product. That's quite impressive out of the 7 million total. They have 500 million daily users of the stories product. So that's a couple of billion story views a day happening. And they've made many references that in 2019, a lot of their revenue growth is coming from stories. Their CFO talks openly about how they've hit ad load, so in terms of maximum ad density within their feed products, both Facebook.com feed as well as Instagram feed. And then stories is where they plan to insert a lot more advertising. And the price for stories is pretty inexpensive today, and that's gonna grow quite a bit. A couple of other thoughts here. So stories, video, commerce, small business, that's all where they're investing. They're generating a huge amount of cash, so they're going to continue to hire people. There's a lot of discussion about their capital expenditures, about $20 billion over the next year. The term deceleration of revenue was mentioned 15 times. So last quarter they grew 33%, this quarter they grew 30%. So that's going to continue the growth rate will continue to slow, and they're very clear to warn about that. That hasn't reflected necessarily in the stock price given how strong their profits are. They shared, and this is from a New York Times article yesterday, there's 371 million fake or duplicate accounts on Facebook. This is a large number, and it seems to be getting bigger. And the final thought was Zuckerberg, on his own, shared that a lot of the business challenges have been self-imposed, and I think that's reflective of a sign of humility, a sign of acceptance of the challenges they're having, and taking responsibility for them. I think Facebook has a lot of work to do. They're clearly growing very fast, users, revenue, the cost of advertising, that continues to grow. But there are some big challenges, and they're very clearly acknowledging them. For the rest of the industry, my advice is to have a strategy on where your business sits vis-a-vis Facebook. Facebook's pretty clear on where they're going now and the size that they're operating at. It's important to have a strategy where you understand where is Facebook a friend, where are they a foe, and then where you do need to compete with them, what's your capabilities to do so. That's my quick update for you on Facebook earnings and my initial thoughts.